And the wealthy don't fear inflation. They own it. Their homes, their companies, their stocks all rise in nominal value. Their debts shrink in real terms. Inflation is their silent business partner. Governments love it too. The longer inflation lasts, the smaller public debt becomes in real value. That's why they'll fight deflation at any cost. Deflation exposes fragility. It makes debts heavier, bubbles visible, and defaults inevitable. Inflation does the opposite. It hides cracks, fills gaps, and quietly pushes the pain downward. Bankers love it most, because inflation guarantees a world that can't stop borrowing. If prices always rise, saving makes no sense. You have to invest. You have to chase yield. And every chase means more credit, more debt, more risk. That's the foundation of modern finance. A belief that tomorrow's money will always be worth less than today's. Here's the cruel truth. The lower you are in the system, the less control you have over it. When you live on wages, your income adjusts slowly. When you live on assets, your wealth adjusts fast. And when you live on debt, inflation either crushes you or makes you rich, depending on what kind of debt you hold. Credit card debt kills. A fixed-rate mortgage leverages. The rich know the difference. Most people don't. That's how inflation turns knowledge into capital. Then came 2008. The global financial crisis was supposed to be a reset, a chance to rebuild something honest. Instead, it became a masterclass in inflation control. Central banks created trillions in new money, not for citizens, but for banks and financial markets. Asset prices recovered overnight. Wages didn't. Quantitative easing sounded technical, but it was really a massive wealth redistribution through asset inflation. Those who owned thrived. Those who rented waited. Then, in 2020, under a global pandemic, the cycle repeated again. Governments injected money directly into households. Demand exploded. Supply chains broke. Inflation hit 40-year highs. Once again, history repeated. Stocks soared, real estate became unreachable, and those who had access to cheap credit profited from the chaos. People said inflation came back because of greedy corporations. But it wasn't new greed. It was the same greed the system had rewarded for decades. Inflation doesn't choose winners. It amplifies existing power. Look at any great inflation period in history. The pattern never changes. In Weimar Germany, the middle class lost everything while industrialists with real assets came out richer. In post-war Britain, inflation quietly erased national debt but destroyed savers' pensions. In the 1970s, US stocks stagnated while real estate and commodities rewarded those who could afford them. And in the 2020s, the top 1% gained trillions while average families fell behind. Different eras, same formula. Inflation is the oldest, most respectable form of wealth transfer on earth. Public anger blames greed, politics, or supply chains, but the root cause is structural. We built an economy that runs on credit expansion, and to keep expanding, it needs inflation. The alternative isn't stability, it's collapse. That's why central banks talk tough about fighting inflation, but their true mission isn't to kill it, only to control it. To create the illusion of stability while money quietly melts beneath your feet. Because if inflation ever truly hit zero, growth would stop, the machine would cease. So the fight against inflation becomes a performance, a delicate dance between credibility and necessity. The Fed raises rates, markets panic, and just before the crash, the wind shifts again. Because deep down, everyone at the top knows a little inflation is a small price to pay to keep the illusion alive. But underneath the policy and the math lies something deeper, psychological. Inflation doesn't just change prices, it changes behavior. It teaches people to consume now, not later. It punishes patience. It rewards risk. It turns saving into fear and speculation into hope. And that's how inflation creates the perfect citizen for a debt-driven world. Always spending, never satisfied, forever chasing security that keeps moving away. We call it growth. We call it prosperity. But underneath, it's the same cycle. Devaluation, reinflation, and rediscovery. It keeps empires alive, it keeps banks liquid, it keeps people obedient. And once you see it, you can't unsee it. Because inflation isn't random. It's how power measures time. It rewards those who live in the future, the borrowers, investors, and creators of credit, and punishes those who live in the present, the earners, savers, and believers. And it forgets the ones who live in the past, those who still think money holds its value. That's why the rich love inflation, and you don't. Because for them, it's not theft, it's strategy. Every generation learns the same hard truth. Money never holds. Every time prices go up, you lose a little more of your freedom. Groceries, rent, gas, everything costs more month after month. And if you felt like your paycheck doesn't go as far as it used to, you're not imagining it. You're witnessing the quietest wealth transfer in human history. A cycle that repeats every generation, because inflation isn't just about things getting expensive. It's about who gets to own the future. For most people, inflation feels like chaos. Prices out of control, savings melting away, systems breaking down. But for the powerful, inflation is order. It's how modern economies survive. Governments fund wars without raising taxes. Corporations quietly erase their debts. And the wealthy watch their assets grow while everyone else struggles to keep up. The real question isn't why inflation happens. It's why it keeps being allowed. To understand that, you have to go back to when inflation was seen not as a goal, but as a national emergency. In the early 20th century, most major economies were tied to gold. Every paper note was backed by metal locked in a vault. Money was scarce, stable, and governments couldn't just print their way out of mistakes. If you ran a deficit, you raised taxes, or you admitted defeat. Back then, inflation was a symptom of war, collapse, or lost discipline. The idea that a government would choose inflation was unthinkable. But then came the Great Depression. Prices fell, wages collapsed, banks failed, the economy froze, not from inflation, but deflation. As money gained value, people stopped spending. Debt grew heavier every day. It was an economic death spiral. That moment changed how politicians thought about money forever. By the end of World War II, inflation had turned from fear to strategy. Governments drowning in debt, some owing more than twice their GDP, realized they could never pay it all back. So they didn't. They let inflation do the work. In the 1950s and 60s, global debt quietly shrank. Not because countries became richer, but because their debts simply lost value. $1 trillion war bond meant a lot less 10 years later. The system learned something. Moderate inflation can solve impossible problems if no one pays too much attention. Then came 1971. President Nixon closed the gold window and ended the dollar's link to metal. It was supposed to be temporary. It became permanent. From that moment, money stopped being a measure of value and became a tool of policy. The world's dominant currency was no longer backed by gold. It was backed by trust. And as long as people believed, money could be created endlessly. Governments could borrow without limit. Banks could expand credit forever. Inflation wasn't a flaw anymore. It was a feature. Here's the paradox. If you hold cash, inflation steals from you. But if you hold debt, it rewards you. Because as prices rise each year, the real value of your debt falls. That's why inflation destroys the poor but sustains the rich. It's not a conspiracy. It's arithmetic. Inflation is what keeps a debt-based economy alive. Without it, every borrowed dollar would have to be repaid with a dollar worth exactly the same. That would collapse the system built on credit expansion. So governments, central banks, and corporations quietly agreed. It's better to let money lose a little value each year than to let the entire system fall apart. But what happens to ordinary people in this setup? Wages rarely keep up. Prices rise faster. Savings, once the cornerstone of security, slowly become loss. Inflation rewards ownership, not effort. It punishes caution. It turns saving, once a virtue, into a liability. Your bank might offer 3% interest, but if inflation is 6%, you're not earning. You're paying to stand still. Meanwhile, someone borrowing at 4% to buy property watches their asset value double. That's not luck. That's design. Inflation doesn't redistribute money randomly. It redistributes upward. The closer you are to the source of new money, banks, governments, corporations, the more valuable your dollars are when you get them. By the time they reach you, they're already diluted. Economists call it the Cantillon effect, named after an 18th century thinker who saw the pattern centuries ago. Inflation changes more than prices. It changes who gets to live above them. After 1971, the logic of money flipped completely. What once punished overspending now rewarded it. What once disciplined governments now freed them. Credit replaced savings, and inflation became the invisible glue holding everything together. By the 1980s and 90s, the system perfected its balance. Central banks promised price stability, targeting around 2% inflation, a number that sounds harmless, even scientific. But over a generation, that halves the dollar's buying power. Groceries double, assets double. The difference? The rich own the assets. Because when inflation is predictable, debt is manageable. Money never holds its value. The only question is, are you the one losing it, or the one deciding what it's worth? Inflation didn't just appear out of nowhere. It's the natural result of a world that wants everything now and pays the price later. It's the silent engine of debt, the fuel of empires, the lifeblood of a system that must keep expanding, even at the cost of the people inside it. And here's the paradox. Without it, everything collapses. Deflation kills borrowers, breaks banks, freezes trade. Inflation keeps the wheels turning, no matter who gets crushed beneath them. That's the moral equation of the modern economy. Growth at any cost. So next time you hear someone say, a little inflation is good for the economy, remember who it's good for. Not the worker saving for a home, not the retiree living on a fixed income, but the ones who own the homes, the ones who built the system, and never wanted to stop rising. Inflation isn't a flaw of capitalism. It's capitalism at full speed, with your wallet running uphill. Because in the end, inflation isn't fire, it's oxygen. And the world we build can't breathe without it. If this gave you a new perspective, hit that subscribe button. History has the answers.